Hey, it's Ron Wexler with the Wexler Group at Keller Williams, and today we want to talk about, do assumable mortgages really work in today's world? So if you've been in the real estate market looking to maybe buy a home, you've probably heard a lot or seen information about assumable mortgages. The question is, will they work for you? Will they help you get a lower rate? And does it actually work or make sense in the market that we're in right now? You know, assumable mortgages, the whole subject is kind of near and dear to my heart because the first home I ever bought was an assumable mortgage. And at that time, all you had to do was send in to the mortgage company for some paperwork, send them a check, and you took over someone else's loan. Today, it's a little bit different. So we can talk a little bit more about what it takes in today's market to actually assume someone else's mortgage, taking over their mortgage and paying them the difference between the mortgage amount and the sales price. So an assumable mortgage is when there's already a mortgage on the property, and of course mostly you want it to be at a lower interest rate than today's rates, and you pay the seller the difference between their mortgage balance and the purchase price of the home, and you get to take over their lower interest mortgage. That all sounds really good. The question is, what does it look like today? So let's just do a quick example. Let's say that we found the perfect house and it had an assumable mortgage at 2.75 and you wanted to buy that house. Sounds easy, doesn't it? Well, the truth is, if they don't have the kind of a loan that's assumable, then none of this applies. And so what we know in this market right now is the loan, if it's an FHA loan, a VA loan, USDA loan, which we have very few of, at least here in the Chicagoland area, that if it's not one of those three, it's not legally assumable. And what I mean by that is people try and do things under the table where they take over a conventional mortgage. And the truth is, we don't really believe that the risk is worth the reward because it's really putting yourself in a terrible position. So unless it's an FHA, VA, or USDA loan, most likely it's not assumable. And of course, most of those loans are being used in the lower price range. So there's a good chance that if it's a higher price range home, it's more than likely a conventional mortgage. So before we dig in, we'd have to really find out what kind of mortgage it is to see if it makes sense. So the other part not everyone understands is that when you assume the mortgage, in the olden days, you could assume the mortgage regardless of your credit and regardless of your history. Now you'll go through pretty much the exact same process that anybody would go through to get a new mortgage. So your credit and your income still have to qualify for that mortgage. So let's just talk a little bit about what you need to actually assume someone's mortgage. You'll need your tax return. You'll need a job verification. You'll need an income verification. You'll need verification that you have the difference between the mortgage amount and the sales price. And so when you think about it, if a mortgage is anywhere from 6 to 8 years ago, that's when you had the lowest interest rates, right? If it's from 6 to 8 years ago, they probably have 20 or 30% more equity than they did when they bought because the market has gone up so much. So you might need a lot more down payment than you're thinking to be able to take over that mortgage. So there's a lot of factors that come in, and the best thing to do is to sit down with one of us and go through all those factors. And honestly, to look for a home based on being able to get an assumable mortgage is not necessarily the best process. It's probably the best thing for us to work with you and figure out exactly what the perfect home for you is, figure out what you qualify for, figure out what your down payment will get you, and then go look for homes. And as we search for homes, if we find something with an assumable mortgage that makes sense inside of your buy criteria, then to pursue that mortgage and see if we can save you a little bit of money on the interest rate. Other than that, in today's market, assumable mortgages probably are not going to work out, and I'd say not over 99% of the time they don't, but it's definitely worth pursuing in the process of you finding your dream home and the perfect place for you and your family to live. So in conclusion, what it really comes down to is you should find the home that makes you happy, that's the home that you want and that meets your needs. And if it has an assumable mortgage, that's great. And we'll try and pursue that. If it doesn't, then I think we still figure out a way to get you into that home with our great lenders that we work with and the systems that we have. So if you're interested in buying a home, or you found one with an assumption and you want to see if it's actually a reality, just reach out to our team. We'll figure out what would be best for you, and we'll make it happen on your behalf. So we appreciate you. This is Ron Wexler with the Wexler Group at Keller Williams Realty. Look for our number below and just call or text or email any questions you might have, and we'll be glad to help you any way we can. Thanks so much, and we'll see you on the next video.